Hey, how was Tuesday today?
Thank you, Scott. A little interesting day for sure. Hello, Andy.
Hey, Steve. Hi, Scott. And hello, friends.
Yes, hello, friends. Welcome to the Trade of the Week theme webinar, one of our afternoon webinar series hosted by myself and Andy. We've been using trade ideas for about 17 years now. So let's get started as the regulars. We're going to go through a couple slides here, just the reminder, the disclaimer that we're not giving you guys investment ideas. The purpose of this webinar is to go over the platform of trade ideas, not to be taken literally as financial advice for any of this. So if you're looking for financial advice, you got to go speak to the other people because we're not allowed to give it out. And just a reminder, as I said, we've been using this product for 17 years, and a lot has happened over those 17 years. And we've seen a lot of changes, and it's a pretty steep learning curve, and we want to help you guys get as much out of you can out of the first month of learning this program, because it's certainly not something you can learn over just a couple days. But no matter if you're a scalper or a swing trader, this program can be custom tailored to look for exactly what you're looking for. If you don't know what you're looking for, we've got the AI, which Andy will show in a minute, which serves up real-time entry ideas. And, I'll just get right into it. The daily support sessions, 12 Eastern, Monday through Friday, you're going to want to attend those. This is the link to do so, trade-ideas.com/live. And what I was getting at there in a moment ago was the human and machine combined. The AI can serve up great entry ideas, and sure, you can let the AI exit for you, but what we're seeing unequivocally is the AI is not that great at exits. The humans are better at exits by just using a couple of simple management or risk management techniques, some of which we talk a lot about. Just, for instance, the 10-period moving average on a 50-minute chart is a pretty good binary pass or fail system for me if I'm trying to figure out what I want to stay in something. But usually the human being can manage the trade better. The AI is great at finding the trades, and the human is really good at managing the trades. So the two combined really sum up the theme, is why I have this slide here every week. Human and machine combined are definitely stronger than just thinking you can flip on a machine, turn your back, go play golf, and have electronic deposits into your account every day at the end of the month. That's not realistic. So anyway, the agenda for today, as we get towards the end of the month here already, I'll go over the market recap, some interesting things popping up. Andy will go over some of the AI recap from today. Our trade of the week actually did not trigger. For the first 2 days, it has not triggered. We'll dissect that. We'll talk about how it was selected and kind of what's happened Monday and Tuesday today. Oops. Let's check our spelling here. At least it wasn't two T's. We're going to revisit the jam down buy alert. And I want to talk about why that's an interesting alert in a bull market, as long as we stay in a bull market. And then I've done some scan creations, I should say, for a new affiliate this morning. And I thought I might share some of that work with you guys for people who do like the small cap stuff. We can create a jam down junior for the small caps. And then, we'll go 45 minutes or so, 15 minutes to the hour, 10 minutes to the hour at the most. And as we get close to the end of the hour, if you guys have a couple of chart requests you want to look at, you can feel free to throw them in the questions window, but wait till we get towards the end, because otherwise they'll get buried. I'll go over a couple of charts that I think might look interesting, and maybe we can look at a couple that you guys think might interesting and come up with a few alerts as well. So look at that, gold's on there. How about that? We'll come back to that in a second. Let's just get started with the typical starting point, S&P 500, which I like to remind people, this is where the market really kind of lost its marbles back here, and we had a very quick bear market territory. And we've been grinding higher ever since, but it's kind of the tale of two indexes, with the S&P 500 having a big weighting in energy, which has gotten beaten badly, and also financials, who certainly haven't enjoyed the party as of late. It's kind of holding the S&P back even from its prior high, whereas the NASDAQ, of course, totally different story. We draw the respective line there for prior high before the market lost its marbles. And what do you know? Then great example of how technology has been the benefactor of this recovery, which would make sense. A lot of people doing things remotely now. I'll come back to that in a second. The Nasdaq. I want to talk about something else. If you were in Jamie's webinar yesterday, I highlighted something, and I'm going to put it like this. You know, the market's been great. My 401k is long. I'm really not short. I'm hedged a little bit with some treasuries, but a great question interviewers always ask is, what keeps you up at night? Well, I'm going to tell you what keeps me. Mike C knows, he was there. I'm going to tell you what keeps me up at night. It's the bearish divergence that we're starting to see here. Let me clean this up so we can really make sense of it. What I'm going to do is I'm going to add some RSI, relative strength index indicator. And anything over 70 is typically overbought. Anything under 20 is typically oversold. But we're not looking for oversold, overbought. We're looking for a kind of a comparison. Let's look at this high here as point number 1. And that corresponds with point number 1 here. Point number 2 is kind of not really a high. It is technically, it was a new high, but not by much, okay? Point number 2 in the relative strength, which gives us how much oomph did it have as it pushed to new highs. We can see what we're going to call a diverging kind of a downward slope there as best freehand I can draw it. So price flat to slightly up, divergence showing that the second push to new highs was significantly less with amplitude, I'll call it. It's probably a good word to use. So that kind of bothers me. That keeps me up at night a little bit, wondering, you know, because we all know, we've been there, the market takes the staircase up, and it takes the elevator down. So when it comes time, the rug gets pulled pretty quick, and you don't really know what's going to happen. I'm not predicting that. I'm just saying, again, what keeps me up at night. Well, aside from yesterday, we have a new data point here, which is this little red candle. And what I see is a little rejection. I'm seeing now 3 days of a difficulty in getting the price candles back above what I talk about all the time, the 10-day moving average. So we're seeing the price kind of caught up here in the net, as well as some divergence. But the trend is still up. I'll give you one more piece of things to consider here. The volume is kind of declining as well. I don't try to give too much weight to volume, but those are 3 issues right now that are giving me a little caution here. I'm not saying get short, I'm not saying sell everything, but I'm just saying these are the things we need to keep an eye on. Now, as we go over and we look at the NASDAQ, we keep our RSI intact over there, and it's even more noticeable. You know, I made the argument yesterday that maybe you're starting to look at this as a double top. You know, Amazon looks even worse than that. But I made the argument, well, maybe it's not a double top. Maybe it's just the beginning of another flag pattern. We don't know. But when you start to layer in another concept of divergence, well, let's just first draw the pretty good slope there of the lower high. We could even start back here with a higher high. 1, 2, and 3. So all 3 points are higher highs in price, but all 3 points are lower highs in amplitude and the way in which they went to highs, if that makes sense. That's probably the best way I can explain bearish divergence, but that's something that I'm just keeping an eye on. And then as we zoom in and look at the price action, same thing goes here. We saw an attempt to move back up through the moving averages, and all of a sudden, what was once holding the price up for the last 2 days now seems to have a lid on the price here in the 10-day moving average. So we'll see how that works out. I'm not saying, again, that this is a bearish call. I'm not saying liquidate your portfolio. I'm just saying it's been a pretty good run, you know, from here to here. Corrections can always happen at any time, and I'll even argue that they're healthy. So keep an eye out on that. Let me just go ahead and remove this indicator like so, modify indicator, and then we will remove. Where is it? And then I'll just ask, there it is, RSI. Anything else you want to add to the market analysis here, Andy?
No, Steve, that was very observant of you too. I usually try to peek over there every now and then at RSI, but I haven't recently. So yeah, glad you noticed this. A lot of times can just be, when you've been watching the market for 23 years, basically 7 hours a day, you kind of get a feel sometimes, just the way stocks are acting, and like the last 3 days I mentioned in the support webinar today, it just feels like we're having such a hard time, moving higher. That being said, we haven't really moved that much lower until the close today, which it wasn't huge, but we'll have to see if there's any follow through there. But you see leading sectors like solars really gave it up today, and when you start seeing some things like that, it's just Steve may be right. You need to have the maybe the alarm not on red, but maybe on the flashing yellow. Just kind of be aware.
Yeah,
That,
caution.
Caution. Yeah.
I wanted to say one more thing. I'm sorry.
No, I was done. Go ahead.
We all know that silver's been on a tear. The AG was a great call last week. Gold and silver, gold hit $2,000 in the overnight markets and the futures. But when we see this extended move, what happened? I think I ruined my my charts there somehow. I did. I'm gonna restart here real quick, just because I need my charts to be correct. Hang on a second. What I want to show you is the gold and silver is on a power move, and I've used the word turbo before. And rather than try to fix the error, I'm just going to reboot and restart. Here we go. So if I go to silver, it should be, there we go. There's my 10-period moving average, above the 20, above the 50. Well, this doesn't tell me much when there's this much airspace in between, right? But maybe some of you guys remember a little trick I've shown you. 20, half of 20 is the 10. Half of the 10 is going to be a 5. What happens if we modify that 10 and change it to a 5? You might see something really interesting here. And I do this a lot, and it's amazing how it lines up. Look at that. So for those of you who are still long silver like I am, that kind of keeps me in the trade, because you might not, or actually, let me rephrase that. Those of you who are looking for a pullback to the 10-period moving average to pick up some of this, you might not get it. When things are in a parabolic turbo mode, they tend to want to follow that 5-day moving average. And I'll just bring up gold one more time. Look at gold. Matter of fact, a fun thing I saw to a tweet today. Somebody said, get long gold because Dennis Gartman just took profits and got out. So Dennis Gartman is one of the best contrarian indicators around. I'm told. I haven't seen CNBC for 5 years. But now that he's out, it's clear sailing to go higher. But that 5-period moving average lines up pretty nicely with that as well. So that's the market recap. That's all I got. I will give it back to Andy to talk about some of the AI stuff today.
Okay. Let me grab it. All right. Not a lot to talk about. It seems like every time Tuesday comes around, not every time, I shouldn't say that, but Holly, the last couple of days, yesterday was a really good day. And I think today would have been better because a few of the longs, obviously, that were trending higher. Like I'm just looking at NEO right now. It's kind of what I focus on mostly. There's a few of the longs here. This held up very well, but you have to imagine, had the market not rolled over, could this have moved higher? It doesn't matter what system you're using, what strategies you are implementing. You're always at the mercy of the market. I shouldn't say always, but in most cases you are. Here's another one that was holding up pretty well, but got caught up in the last, hour of trading there. So this one, I'm not sure what would have happened there, but nonetheless, not a bad day. It just kind of, and I thought this was a great trade right here, this LW, because it was weak. It's from a strategy pullback short, which means you can see the stock moved down close to lows, got a little bounce, and there's where Holly alerted you that this is a possible good short. Little bounce up against, against the direction you were hoping for if you were short, but nowhere near the stop, and then it rolled back over, and you can see pretty much just followed the trend, all the way down, followed that 10-period moving average that we always point to pretty much all day long. And this was, if you held to the close, was a 4.5% winner, so not bad. In all fairness to Holly, I don't count Holly to the good side when there's two trades, identical trades in there. Same thing goes to the bad side. If you were short Holly, I don't think it would be wise to, and it's going against you, to also take a second position in a call for a short. It's just the way it works out sometimes, because the strategies are actually independent of each other inside the AI. So you do get these little duplicate calls. I'm hoping in the future we have something to prevent that. But for right now, you just kind of got to use your own judgment when you see that. Maybe if it's working for you, you can double down, but not something I would do if you're already negative in the trade. But that being said, it's pretty much another ho-hum day. There was a couple of trades in Holly AI, one winner, one loser. not going to look at that. And Holly 2.0, I hadn't seen this in a while, 0 trades from Holly 2.0. So not a lot of action. You look at what Holly had to work with today, and just a tough day all around. Hog was just one of those trades that earnings trade that head fake down, and then all day long they were buying this back. Something you might keep an eye on in the future when you have that much buying. I don't know what's going to happen, but definitely strength there, even when the market rolled over, and for the last hour this held its own. So I'm not saying buy it, but that's some incredible strength on a weekday. Well, it still finished down on the day, so I shouldn't call it an incredible strength, but an incredible bounce back from the open. But other than that, Steve, I'm going to pass it back to you. There's just not a whole lot to go off of. LW was probably the only one to highlight here. There was a good one. I'm not going to pull it up, but in Holly 2.0, Starbucks was kind of a nice one that, well, not really. I thought it wasn't as good as I thought. Well, about $1 in that trade. You were able to short that, but you would have had to ride the sideways action for a long time.
Followed that line that we talk about for the trader to use for management for the most part.
Yep, it did.
It just didn't set the world on fire.
No, it didn't. All right.
How do you turn the volume on? I'll show you that one. I'll take that one.
All right.
I'll question on volume. Yeah, volume. So if you're talking about these volume, which Andy has his colored greens and reds, you just need to right click into your chart and go to indicators and select volume. I've also selected that line for average volume as well, but that's all you need to do. And assuming that was your question, Kieran? Kieran. All right, so I think we're at the point of the webinar where we talk about the trade of the week, which was First Solar. And it did not trigger, which is really unusual. Let's zoom in here, and perfect, there we go. Look at that shape. That's the kind of shape that caught my eye on the weekend, and it's the kind of shape that I would be interested in setting an alert and monitoring for a possible breakout any old time. Looked really good. It was derived from the A table, which we will scan through a little bit later. The A table, again, is looking for stocks that are in a nice upward trend, and they don't necessarily have to be consolidating, but the ones that are consolidating find the most interest in my world. So that was the trade of the week, but the best part of this is we don't say just jump in and buy that sucker on Monday, and I'm so glad we didn't, because we said, flags will continue to flag until they confirm. You can try and be an early bird and buy off of this moving average, which I will do all of the time, but for intents and purposes and for the sake of the trade plan that we sent out, which is right there, it will not be considered live until the price is above 62.75. Well, yesterday came, today came, and we did not get a trigger of that 62.75 level. Even though it's green, it should be blue. I think it's because it might have ticked after hours. And anyway, the trade did not trigger. And so not only did it not trigger, guess what happened here? You guys have heard me talk all the time. What is the worst thing in the world I want to see that tells me momentum is dying? That is a candle that closes and closes that time period below the 10-period moving average, which tells me momentum has now stalled. And it's not necessarily surprising. I really didn't go over as much as I could have in the I'll backtrack a little bit here. This was a really nasty close, and this will dovetail what we're going to talk about next. Really, it'll help understand why some of these things failed, but this was an ugly, ugly close. We haven't seen a close that looks like this in a little while, and same thing with the NASDAQ. It just, the sellers kind of came in with 2 hours to go and were relentless. There was no pullback to bounce by into the close, and that's what we've generally seen, a nice bounce by into the close. So it's usually comes down to how did the price close. And back to our example for the trade of the week, which did not trigger, so there should be no harm, no foul. Even if it did trigger, it would have been the world's quickest out, because we don't want to see candles that look like this and close below our momentum line. So no harm, no foul. This trade doesn't count this week, and because it never triggered. So that's really nothing else to say about that. I don't really have any other thoughts about it. It didn't trigger unless Andy has something he wants to talk about. It looked great. Like I said, it looked great 2 days ago. That's the kind of stuff I look for all the time. But
Only
2
thing
days.
I'll say is I think it probably would have triggered, but it did get a tier 1 downgrade on
Yeah,
Monday
that's right.
morning.
That's right.
So that may have been a blessing, though. Maybe if it hadn't got that downgrade, it could have triggered, and we could have still gotten that price action. So
And there's the downgrade there, the big D. But the way it fought back, I thought, oh boy, this is going to be a good one. I'll let you guys know I actually jumped into it. So I lost money on this trade. I got out. This is AI stuff, but I got out right about here. Said I don't want to be any part of this. I thought I could be an early anticipator. And as I said earlier, I like to do that sometimes. But if you're going to anticipate a trade, you got to also anticipate the trade failing, and you got to get out. So I did. All right, looks like we're good on questions. What I want to talk about is I just want to remind people, and one of the reasons I brought up that S&P and NASDAQ intraday chart to show you the kind of nasty selling that found its way into the market towards the end of the day. When I started the day, I wanted to talk about this jam down buy. For those who haven't heard it, you might like it. For those who have heard it, I'm sorry, we're going to talk about it again. This probably is one of my favorite scans, as I mentioned, 17 years of using trade ideas. Now, when Andy and I first started using trade ideas, guess what we were doing? New high, new high, new high. We were just chasing new highs like, oh, new high everywhere. That's all pretty much trade ideas was. And it's evolved a lot since then. And a couple of things it's evolved to is giving me, the ability to zero in on the 10-period moving average. And the interface of making it show you what you want is really the best part of the real time, and seeing it in real time is the best part of this program. There's a dime a dozen scans out there where you can, at the end of the day, go on FinViz and you can click and you can sort, and that's great. Those don't take much behind the scenes, but we don't really have any competition for a reason. We have a savant that created this platform 17 years ago in the cloud space, and thank God you did, because that's the way everything is run today. So here we are. The jam down buy is something that I like to look at. Let's just go ahead and click into, say, Roku. All right, or maybe something. Look at this First Solar. I want to point that out. First Solar was actually a jam down buy this morning. What is the jam down buy? These are ideas that come through on the daily chart that are looking pretty good on the daily, but have a momentary blip in the morning usually that come down and touch the 10-period or the 10-day moving average in this case. And I like it because when it works in a bull market, I'm going to say that again, when it works in a bull market, it's unbelievable entries. I mean, I'm just going to, let's go through and accentuate a few. And by the way, I've got this quickly. Let's look at the under the hood, because it's always a good idea. These are new lows, so we're going to see the event in real time when the stock makes a new low. But we're only going to see that new low on stocks that have a really good stock composite rating, 80 or higher. And I added this, the time of day. I don't want to see anything for the first 2 minutes, so the time filter blocks out the first 2 minutes. And then by the end of the day, I don't want to see things doing this after 2 hours. So this is 120 minutes, a suppression cap. So the time window for me here is 2 hours after, 2 minutes after the open, all the way into 120 minutes after the open. This alert's going to shut down. That's the window of opportunity, because these things generally make that downward move in the morning. And again, these are stocks in the bigger picture that look well. And the algorithms, for whatever reason, especially in this day and age of free commissions, they're selling your order flow to make money to make up for those lost commissions. And so when you put in good till canceled stop market loss order, that's being immediately sold and sent to Citadel and Virtue and other market making firms. And when they see them lined up like a bowling pin, they're going to knock you down, and they can make money on it by reversing you, or reversing it and participating in the reversal. So I'm trying to kind of capitalize on that, and that typically happens in the first couple hours of the day. My price level's there, but here's the key. I only want to see that new low on strong stocks that have been up at least 10% in the last 20 days, another good way of looking at it. But when they come down and they're within 500% percentile and no less than 0.1% below my 10-day moving average, that's my magic line there for the most part. So now I've got a way to communicate to trade ideas. I want strong stocks, but in that momentary morning pullback, I want to know. So let's go through and look at a few of these. I wanted to show you the time filter. So the first one came through at 6:32, which is 9:32. At 122.84, 122.84. I know that's close. No, up 22.84. There you go. So we're going to just focus here on the intraday because that's really what I wanted to show you there. That's a pretty good contrarian indicator, which is a whole other thing. You guys have heard me talk a lot about being contrarian. If you're going to follow and run alongside the herd, you're never going to separate yourself and make money. You need to be one step ahead of the herd or going contrarian to the herd. And this is the type of scan that will show you those in real time. So who wouldn't like, what day trader would not have liked to pick this one up here at 122.79? This next one came through. All right, this one, a little bit of pain. And then again, what you're going to see is most of these are going to roll over. And what I'm going to say to that is you've got to pay you've got to pay attention to the bigger picture. If the NASDAQ and the S&P starts rolling over, these types of trades aren't going to work. But on days when they do work, well, there's that Z again. Let's look for a new symbol. Okay, that one kind of got a little washy and went lower. First solar, we know for the moment. Let's see, the first solar triggered at 61.39. Oh boy, look at that. That's the same as the AI. My scan picked up the same as the AI. How funny. Except I was going the opposite direction. A bounce would have worked for a few hours there. And then look at this. The first solar really is just a component of the market falling out of bed. There's another one. QDEL came through 8 minutes after the open at 55.21, basically right about there. Let's see what else. I mean, there's a few names that came through. So, you know, this is a great one, actually. Checkpoint 122.28. Who would not want to have, as a day trader, the ability to pick up something? Let's look at the daily chart on this one. So it's been moving higher, came down and flirted with the 10 period, and it bounced. But again, I want you guys to understand that all bets are off at this portion of the day because of the bigger picture, what the market did. So if this was just another bull market day, this is a great scan in a bull market. You saw that one. That's Roku, I think, came through. Roku came through, what did it print at 151.98? A little bit later up there. We saw that one. Pizza, what is it? Vapo, oh, I haven't seen that one. That was a great one at 49.06. This came through 20 minutes after the open. 49.06, not quite as good as I thought, but the point is, when I go through this a lot of times, symbol after symbol, there's some really interesting entries, and you're starting to get a little later in the day. Here's an hour after the open, LOGI, 69.58. That's a good entry right there. That's a really good entry. That's probably one of the best I've seen. And this is a good example of those algos dipping their toe down. This is a nice looking chart. We're gonna have to come back to this and mark this one up. So now that I downshift and look backwards in time and look left, this is what I see. I'm seeing a really nice looking wedge. You know, if the market wasn't such crap and didn't close, you know, with a 2-hour ugliness, that's really interesting. So for the moment, or the moment in time, that was a nice bounce. But then the market helped give that up at the end. So I'm going to pass this out because there's no point in me showing this without, look at this. This will be the last one we look at, 26.10. Who would not have wanted the alert maybe at 26.10 on that for a nice bounce? So these are contrarian entries. That's a darn good daily chart too. Sideways, sideways, sell it down, try and run the stops, tag the 10-day moving average, and that's when we get alerted. Nice intraday lifts off this. So what I'm going to do is I'm going to put this back into real-time mode, and I will share this for whoever wants it. We'll do save and share. But it's always important, I think, for me to explain the concept behind it. All right, so moving on. I spent some time today with one of our new affiliates who's very excited to use the program. He was a TC2000 scan chart user, and he sees the tremendous benefits of trade ideas over TC2000. So I want to help kind of get him going. And he and his group like to trade penny stocks. And he has kind of the same, he gave me a list of ideas to look at, and I can tell he's kind of like me. He likes to look for things that might have pulled back to an interesting level. So I loaded something from the cloud. I made something already, so we'll do this in the interest of saving time. We're going to call this, jam down microcap, load that. All right, so remember I have in the main window, jam down, we've got higher price stocks for sure, $5 to 300. We also have this stock composite rating. Well, for micro caps and small caps, I'm going to have to adjust the price, and I'm going to have to probably get rid of the stock composite rating, but we can work around that. So what I did was I created this. And as you can see, the price is now 1 penny to no more than $2. And everything else is the same. These are stocks that are at least down 1% on the close because they're going to pull back and make a new low. As our alert, same thing, new low. And change in 20 days. Since these are smaller price stocks, I bumped that up to 20% as opposed to 10% we had before, because smaller price stocks can really get moving. And then for volume, I did not do average daily volume. I just did vol. Actually, I did do both actually. So what this came up with was kind of an interesting concept. It's I'm going to call it Jam Down Junior. I haven't changed the name of it yet, but let's see. It only came through with 2 things today, and more importantly, it was one of the things that the user client was looking for. And let's zoom out and take a look here. NOVN. So here's a stock that basically was asleep, a silly little 50-cent stock, little blip there, something happened, interest is coming in, volume all of a sudden, big push, moving day here. Okay, well now it's working off all of that. And is this stock going to be ready for, round 3 of a penny stock push? Well, there is a beautiful pullback to the 10-period moving average, and there we go, there's my arrow. It came through at 76 and changed, so, but, perfect. Beautiful little entry right there. So for those that want to be contrarian, you don't have to buy it there, but at least you can put it on your radar and decide that you want to watch it. So that one came through, and then this is the only other one that came through. So we're seeing, again, stocks that are in the small micro cap land that I might have to bump this up to $3 because $2 would have possibly missed that one. And we might even see some more if we can. Screw that. Let's go to $5. We're going to bring in a lot more. Bring in a few more names here. Let's see what we got today. We only got one more name. Looks like MTP. Oof. But nonetheless, we're seeing penny stocks that have pushed higher and then are pulling back, making a new low on the day, but touching that momentum line. And again, if we look at this example over here, this is a pretty good example. How many times? That's a test, that's a test, that's close to a test, that's a test, and that's a test. Today, technically, closed a little bit weak, but then again, as we said, so did the market. So this is the Jam Down Junior, and that's a kind of an easy example of how you can take something and modify it to make it work the way in which you might want it to work. And I'm doing this for, like I said, a user who primarily would like to trade penny stocks. So I will share this as well. And I'll put this in the chat window. Doing all right on questions there, Andy?
Yep.
Quiet group today. Yesterday I was typing like a madman.
Quiet group.
Okay, so go ahead and throw that down. What I'd like to do is I'm going to go through a few. Let me just see what I've got in there to start with. Price alerts. Yeah, let's get rid of the ones that have triggered. And I'm gonna go ahead and rip all these out of there, and we'll start fresh. All right, so we're gonna do some price alerts. First one I noticed again from the A table, and then this is where we found First Solar, and this one held up relatively well, but I've seen this one coming through. Andy, we've traded this in our other account, haven't we? Where Michael and Jamie were, I believe.
Yep, we have, yeah, for sure.
I don't know who they are. I don't know what they do. I don't really care. They just have a nice chart. And here's what I want to do. Here's what I want to propose on this one. Not your typical breakout move, but look at this one. This one might come down and give us a jam down buy type of an opportunity. So if we eyeball this sucker, maybe take out yesterday's low and eyeball a possible correspondence there, we might get lucky and get an alert if this thing pulls back and touches the 10-period moving average. And if the market is holding up, this might be an interesting alert to keep an eye on. And again, what I'll do is I'll make the announcement now. We'll go through a few of these. We'll set up a few alerts. If somebody has a chart they'd like us to finish up on as we come out of this content, we can finish up and look at a few charts. And it always helps to know when you guys tell us if you're long or short or thinking about going long or thinking about going short. Kind of helps us give you an idea. All right, Carvana, I'm not interested in just, moving trains that just keep moving higher. I'm looking for congestion. Well, one could make an argument here that Wayfair has found some congestion, but the point of Wayfair is it's near the top of my scan, which means The stocks up here at the high end of my scan, they're sorted by short float. And these have a higher propensity to go. It's one of the reasons I liked APT. I'm not going to chase Carvana, but Wayfair is consolidating here. And if Wayfair decides to frustrate the shorts above that blue line, there could be some more short covering and what we would call a short squeeze. So I'm just going to quickly go through these. I actually like this. Delphi is setting up. Delphi is probably a pretty decent name. This one's a really nice flat one and a very skinny range at that. So because of the skinny range, I'm just going to go ahead and do it old school. We'll pop that out and see if it can take that out. BSLR has been a good one. It actually came back and touched that moving average today, but that's been a big move. I'd like to see a little bit more constructive consolidation on that one as well. That one could easily come back. That's probably one to keep an eye on. No, I'm not going to chase that. CWH, this thing is really just really, again, you can see these examples holding on to my 10-period moving average. What I'm seeing here is probably the beginnings of maybe a wedge. Let's do this. Let's go ahead. I kind of like this. Let's just draw it above today's high. If it can get back above today's high, it's probably got some juice in there. I mean, trends are great, but again, I'm looking for consolidation. That's a big, ugly, nasty reversal wick. I don't care for that. There's our AG trade of the week last week. And the more we go down this list, the less short float there is to play with. That's some decent consolidation there. New York Times, huh? Probably not a lot of volatility in that name, but nonetheless, that's the consolidation we're looking for. Beautiful example of riding the moving average, the 10-day moving average, but kind of a messy consolidation. Interesting. I'll pass. I think I like this one. I'm going to delete that, and we're just going to say if this thing can take out that range, it's going to look interesting. All right, I see some people dropping in some chart symbols. Let's see if we can find a few more alerts, and then I'll pass these alerts out with that Korea. That's a strong one. So I'm going to go ahead and mark this one up as well. This will be our last one. All right, so this is really what I like to do. I just like to kind of scan through my end of day A table and look for the things that are strong and look for the things that are consolidating and might have a possibility to move higher. I'm not looking to scan for any shorts right now, but again, from my initial comments on the market recap, I'm a little cautious here. Still looking for ideas, but in the back of my mind, there's that divergence that bothers me. So no, we're not. I'm talking. I need to give out the price alerts. I don't want to give out the A table. We're going to share the 7 price alerts, and then I'll take a look at some of your your chart requests, and then we'll bring in Scott in about 5 minutes for some announcements. Price alerts shared, so you can just accept that code in the chat window, and those price alerts will trigger for you. Rakesh, I like a good 4 or 5 days of consolidation, minimum 3 days of pullback. The question was, consolidation, how much do you like and what would you consider it? All right, so boom, 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 boom. The first one that came through, bought APT. Okay, so somebody bought APT, so they're already in that one, good. TRSSF, if that one comes up, it's a foreign stock. Okay, nice looking stock. It's in the move. If you're positioned, then you had a good day today, and you can see exactly why I like that 10-day moving average, Kieran. LTHM. Was that the same one? LTHM. Yeah, I'm not seeing as much there. This one looks a little under pressure. I like the first one that you gave before that one. DWDP. Someone says, oh, if you're short that one, it looks good, but this thing is just getting beaten up. Now, I will give it.
I don't think that one has. Go to the last day. I don't think that one is traded in a couple of months. Look at the date on that.
Did I type the wrong one also?
No, you typed the right one. I just don't think it.
DWDP. Okay.
Yeah.
Yeah, that one hasn't traded since May. We'll move on from that. On the trade of the week, short float days to cover. Are those parameters for a short squeeze? Scott, I usually look at the percent short, but days to cover is certainly a component of that. So if you have giant days to cover, like 15 days to cover, that's pretty big. But I like anything over 20%, 25%, that gets my attention. Because if they're wrong and the stock's moving their opposite direction, that's enough to get them to panic. Okay, CWH was the next, I believe. Yep, pretty good, pretty good. Yeah, I like that. We actually, looks like we put a price alert on that one. Yeah, okay, it's Mike C talking about that one. When the price alerts are saved, it puts them in and they disappeared the next day. They shouldn't disappear once you've added Mind Debbie. It's always a good idea to save your layout too. What's a good consolidate? Okay, so we're getting close to the end here of this chart request. Somebody's like, oh, that's not bad at all. I like this one. I've seen this one too. Spike. So, you know, what we're seeing here is a really nice looking wedge pattern that is respecting the 10-period moving at 10-day moving average. Looks nice. What I would just simply do is probably put a price alert, you know, right above there. And if it decides to buck the trend, then you're on your way. LL needs a little pullback. Lumber liquidators has had a great move. You almost got like the I forgot what you call that candle there. Chopsticks, I believe. Yeah.
Now that's one you might want to wait till that 10-period moving average. Yeah.
I would just like say, you know, put a price alert down here roughly, and maybe wait for your pitch and see what happens there. Okay, DWP. Which one did you mean, Andy? DD. He meant double dog. DuPont, huh? You know, not bad. I mean, it's what it's got going for DuPont is it's riding above its 200-day moving average. It's trying to get above all its moving averages today. Bit of a nasty close with the rest of them, but not bad. Not bad at all. It looks very much like the S&P to me, for quite honestly. It's just kind of finding a reason to try and go higher. We'll do one more, and then we'll do two more. We'll do CSIQ and then ERIC. Then we'll bring in Scott. CSIQ, remember we had First Solar as our trade of the week, and it died pretty hard today. CSIQ, honestly, whoever asked that is a messy looking chart to me. I think you're just going to want to make sure it holds that 20-period moving average like it did a few days ago, and then you'll see where it goes from there. The last one we'll take a look at is ERIC. ERIC, nice move higher. Ericsson, huh? So it's an ADR. It's a foreign company. You're going to get a lot of gaps in the chart. Same thing Andy said earlier. Why don't you maybe wait for this moving average to come back into play, and then it might be interesting. All right, Dean snuck one more in there, and then Scott can go off mute. The last one we'll look at is BOXL. Not bad. Looks like a $3 stock. Would have been nice to see these last 2 days closing above the 10-day moving average that I like. So it's kind of in no man's land here, but if you want to just watch price, just make sure it doesn't violate that level right there. All right, I'm all talked out, so we don't want that. We want this. And we'll bring in Scott for any further announcements. And thank you guys for showing up. Always appreciate it. Don't forget that we have that afternoon session, East Coast, our YouTube live stream for 1 hour. You can get a lot of great answers on that. You'll see the link in a minute. All right, Scott. Well, I'm waiting for Scott. This is the link right here.
Mute button. Yeah.
That's the one you guys want. Please come to this. Come join us. All right.
Yeah, a couple items as we exit today. There is a new ebook that's really helpful during earnings season, so go ahead and grab that if you don't have it yet. trade-ideas.com/earnings. It's got some strategies that you can import into your layout via CloudLink, as well as a good walkthrough of how to use earnings season to your advantage. There's a podcast. We've had some interesting interviews out this year, so go ahead and check those out. Just search for Trade Ideas Podcast wherever you listen to your pods. Add us as a subscription so that you get the next one delivered automatically to your device. There's a code, summertime, all caps, or actually we're not even case sensitive anymore with the new payment system. So just use summertime to save 15% off your first month or year of Trade Ideas or upgrade from standard to premium. Any questions at all, just email us, info@trade-ideas.com. That goes to our help desk. You can also follow Steve on Twitter @TodayTrader, follow @TradeIdeas, @QuantBot, and any of our other handles. Trade Ideas Pro is the Facebook page to like and share stuff with your friends. Thanks, everyone. The recording of this webinar will be up later on tonight or tomorrow, and we'll give you an email update of how to find it. Thanks, everyone. Have a good day.
See you next time.
Bye-bye. See you on Thursday.